All right, let's talk taxes. A huge new tax law just got signed, and it's bringing 4 brand new deductions that could seriously shake up your tax returns starting in 2025. So today, we're going to break down exactly what they are and, more importantly, who can actually claim them.
So the question you're probably asking right now is, could this new law actually lower my taxes in 2025? And, well, the answer is, it's a solid maybe. It really all depends on your specific situation, which is exactly what we're about to get into.
All right, let's get right to it. We are diving into the One Big Beautiful Bill Act to figure out what's really coming for your taxes.
Okay, first things first, let's get the timing straight. This law was signed this summer, but you won't feel its effects until you file your 2025 taxes. And here's the really crucial part you have to remember. Right now, these are temporary. They're currently set to expire at the end of 2028. So this is a limited time window.
Okay, let's kick things off with the first big section. This one is all about deductions for American workers, and it specifically zeroes in on 2 areas: tips and overtime pay.
So the law creates 2 totally separate deductions here. You've got one for tips and one for overtime. Let's break down how each one is going to work.
First up, the no tax on tips deduction. This is a big one. It lets you deduct qualified tips, doesn't matter if they're cash or from a credit card, up to a pretty generous maximum of $25,000 a year.
Okay, so who actually qualifies? Well, there are a few rules. You have to be in an IRS-approved tipped job, and you've got to report those tips on your W-2 or 1099. But here's the big one. There are income limits. The deduction starts to phase out if you make over 150 grand as a single filer or 300 grand if you're married. And speaking of being married, here's a key rule. You have to file a joint return to claim it. All right, now let's talk about the overtime deduction. And there's a really important detail here you can't miss. You can't deduct all of your overtime pay. No way. It's only for what's called the premium portion. So think about time and a half. You can't deduct the time, just the extra half part. That's the part that's deductible.
And this lays out the max amounts you can deduct pretty clearly. If you're single, you can deduct up to $12,500 of that premium overtime pay. If you're married and filing jointly, that number doubles to a cool $25,000. And just like the tip deduction, this one has the same income phase-out rules.
Okay, let's switch gears completely. Next up, we have a brand new type of deduction aimed squarely at new car buyers. And this one is interesting. It lets you deduct the interest you pay on your car loan. And the number here is pretty eye-popping. We're talking about a maximum deduction of $10,000 a year in interest payments. I mean, over the life of a car loan, that could add up to some really significant savings. So, what's the catch? What makes you eligible? Well, a few things. First, the loan has to be new. It has to start after December 31st, 2024. Second, the car has to be for personal use, not for your business. And you really got to watch the income limits on this one, because they're a little lower. It starts to phase out at $100,000 for single filers. And one last thing, and this is a deal breaker, you absolutely have to put the car's VIN on your tax return.
But wait, it's not just about you and your loan. The car itself has to qualify. So here's how you check. Step 1. It has to be a brand new vehicle. No used cars. You have to be the first person to own it. Step 2, and this is a huge one, its final assembly has to be in the United States. And how do you check that? You can look for the vehicle information label right on the car, or just pop the VIN into the NIHTSA's Dakota website to be sure.
Okay, moving on. We've got one more group to talk about, and that's seniors. The law creates a brand new deduction just for taxpayers who are 65 and older.
And the benefit here is super straightforward. It's a new $6,000 annual deduction for every single person who qualifies.
And you guessed it, if you're a married couple and both of you are 65 or over, that benefit doubles. You can claim a total deduction of up to $12,000. That's a pretty nice boost. Now, listen up, because this is a really important point. This is not replacing anything that already exists. This new $6,000 deduction is in addition to the extra standard deduction that seniors already get. It literally just stacks right on top of the benefits that are already there. So, to be eligible, you got to be 65 by the very last day of the tax year. Now, the income phase-out on this one is actually the lowest of them all. It starts at just $75,000 for single filers. And just like all the others we've talked about, if you're married, you have to file a joint return to get it.
Okay, so we've covered what all these new deductions are. Now let's talk about the how. In this last section, we're going to get into the fine print and some expert advice that you'll definitely want to keep in mind before you file.
Think of this as your final cheat sheet. A few key things to remember for all of these deductions. First, they are temporary, at least for now, only for tax years 2025 through 2028. Second, and this is a huge plus, you can take them whether you itemize or just take the standard deduction. But, and this is a big but, you have to pay really close attention to those specific income limits for each one. And remember that golden rule: if you're married, you've got to file jointly to claim any of them.
And you know, this quote from the pros at Tax Lab Inc. really hits the nail on the head. They point out that even with all these new breaks, the changes might not just jump off the page on your tax forms. They put it this way. They said, it's going to be hard for you to tell the difference. That's why you're going to need a professional. It's a good warning.
So there you have it. These new rules are on the books for the next few years, and they represent a real opportunity for millions of people to save some money. The real question now is, with everything we've just gone over, are you ready to plan ahead and make the absolute most of it?